I'd love to get your opinion on Trump's use of tariffs as it relates to our economy, if you've got any thoughts on that.
In the late 1990s. And so for 6 years or so, I was into that, and I had purchased several properties, and then 2008 hit and I just was wiped out. And at that point in time, I realized there are experienced operators out there whose teams are already together. Join with those who already have it together.
Welcome to another edition of Lifetime Cash Flow through Real Estate Investing. I'm Rod Cleef, and I'm thrilled you're here. And I know you're going to get tremendous value from a very interesting gentleman I'm interviewing today. His name's Alan Lomax, and he's the CEO of Steed Talker Capital. He's a PhD in a topic that I'm not very familiar with at all, but I'll let him tell you about that. Welcome to the show, my friend.
Well, glad to be here, Rod. Thanks for having me.
Absolutely. Well, why don't you give us a little background on who you are and kind of a major shift from your educational background to where you are now, and maybe speak to why and all of that as well.
Well, sure. I was a really late bloomer. I spent the first 20 years of my adult life as just really ne'er-do-well, going nowhere from dead-end opportunity to dead-end opportunity. And then when I was 38, a crisis hit. Actually, it was the ending of my marriage, which was totally unexpected. And it was, I guess you could call it, my rock bottom moment.
When was this?
In 1989.
89, okay.
Yes. And so at that point in time, I went into psychotherapy for the first time in my life. And for the first time in my life, I actually started seeing what I had considered weaknesses, essentially, as actually my strengths. And began to realize that there was a lot that I did have to offer and to contribute. And started really, for the first time in my life, actually providing what comes very naturally for me to provide for others, and that's really unconditional positive regard and empathic understanding, and started applying that to myself. And then went into counseling, went back to school, got my master's degree, and then eventually my PhD, and ended up as a university professor. And for the first time in my life, at 42 years old, I finally had a passion. And it has driven me ever since then. And it has been that passion to really to see that other people don't have to spend 20 years of their life finding who they are and what they are. And I mention that for a couple of reasons. I mean, a lot of people, particularly entrepreneurs, you hear their story. I started mowing lawns when I was 5 years old, and I sold my business when I was 15 and made $1 million. And I'm not knocking those people. I think that's great. And that's what I want other people to do, is to really find themselves early on in life, so they don't waste 20 years of their life trying to put their feet on the ground and really find their passion.
What were your weaknesses that you discovered were actually strengths? I'm just curious. I mean, I think you kind of alluded to them, but if you wouldn't mind.
Well, I'm an extreme introvert, and I always looked at that as a weakness, which it is.
Oh, no, I disagree. I disagree completely. I will tell you, I think some of the most successful people in this business are introverts. You know, I'm an extrovert. You know, as an introvert, you get energy from being alone. I get energy from being, like, I go to the mall to feel better. I get energy from being around people. But I will tell you, as an introvert, you're a much better communicator. Because me, when I'm communicating with someone, my brain is working so fast, I'm looking over their shoulder, waiting for the next conversation rather than really focusing on who I'm talking to. And so you have the ability to build a much deeper immediate connection with someone than someone like me. So yeah, I have to disagree with you. I think my ex was an introvert, and she'd go in her closet and literally spend 6-7 hours in there, loving rearranging her for clothing. So yeah. Anyway, so introvert. Was there any other weakness that you discovered? I'm just curious.
Well, extraordinarily sensitive. So sensitivity and introversion are. Well, I think it goes like this. It's on a spectrum. So our greatest strengths are also our greatest weaknesses.
I have to agree.
And
so you're much more compassionate than other people.
Yeah.
Yeah.
Exactly.
Right.
So
okay.
So realizing that those are not, or they are weaknesses certainly, if I allow them to be, but learning how to utilize those can be my greatest strength as well.
I mean, as a teaching moment right now, can you identify, I mean, I'm sorry, this is totally a non-real estate related, but I think
it's related.
Well, we could add some value here. Because I think this ties into a little bit of your study as well. Are there any other weaknesses that we could outline for people that are listening that they might be able to reconsider as not a weakness? Does anything come to mind? I mean, I'm throwing this at you out of the blue here.
How deep do you want to go?
Well, a lot of people have limiting beliefs about themselves. I tell the story of, immigrating to this country when I was 6 years old. I didn't speak English, got thrown into school, got my butt kicked for the first time, found out what bullies were. And that, coupled with some other experiences I had, caused me to believe I wasn't good enough. And so I guess that belief caused me to really achieve some pretty significant success, because I had to prove to the world I was good enough. But it also cost me relationships, family relationships, and things like that. So I guess that would be an example of what we're talking about here. But as far as weaknesses, or the perception of weaknesses, I love that topic. So guys, if you're listening and something comes to mind where you feel like you're weak in some fashion, you might want to look at the potential power that you can get from that perceived weakness. I don't know if anything else comes to mind for you, if any other higher level ones, but if it's a deep conversation, we probably better leave it alone.
Well, not diving too deep into the woods, it certainly has to do with one's genuineness. I was presenting to the world, or attempting to present to the world, somebody I really was not.
Oh, that's really good. Yeah, same. So many of us have this imposter syndrome, and or the need to prove. And through, I went through the whole show them I'm good enough through material things, the stupid crap like cars and toys and things of that nature. And luckily I'm mostly past that now, but that's not genuine. It's not authentic. And that's a really profound statement you just made. So I cut you off mid-range there, but so you got your PhD. If you would, please start from that point forward, and why real estate. And yeah.
Well, the work I was doing was extraordinarily rewarding. Actually, right. I still do that.
Oh, do you?
But I wanted more wealth than that, and so I started looking into real estate. And like so many people, I started in single family. I mean, there's so much hype.
And this was in North Carolina?
This was in Texas, and also I was working as a university professor in Guam, so I was investing from Guam. But I was doing it in single family homes. I mean, HGTV makes that so glamorous, and it looks like, oh, that's just such a wonderful thing to do. Well, that's what I was doing. And
like so, flipping and wholesaling, things like that?
I was purchasing and holding, and I was actually doing what they call today, which is house hacking. And so I was taking larger single family homes and converting them into triplexes and fourplexes. And that worked pretty well. And I started really getting into that in the late 1990s. And so for six years or so, I was into that, and I had purchased several properties, and then 2008 hit, and I just was wiped out.
You were wiped out.
And, I mean, I didn't have really big dreams of becoming a multi-millionaire. I just wanted, some wealth. And so I didn't have,
what did you have in 2008? I'm sorry to interrupt. What was your portfolio like at that time?
I had about $1 million in assets at that point in time. I was an accredited investor.
Houses?
At that point. Yeah, houses. Yes.
Yeah. Yeah.
And so I had several single family, and I had a small mobile home park. And
wow.
So.
And this was in Texas, or?
This was after actually I moved to Colorado.
Colorado as well.
And
okay.
So I had it in Colorado, and then it was after I moved to North Carolina. I had some property in Colorado.
Oh, interesting.
And then also in North Carolina. And
I used to have 500 houses in Denver at one time.
Oh, really?
Yeah, I wish I still had those. Oh my God.
Yeah.
I woulda, coulda, shoulda. You can't do that, but sometimes I'll go back and I'll think, so I sold all those to buy about 1,300 houses here in Florida, which I lost in 2008 and 9.
Mm-hmm.
I'm sure Matt told you I lost $50 million in 2008 and 9 conservatively. And if I still had those Denver houses, they'd be free and clear, and I'd be probably bottom line netting about $1 million a month from that. Yeah. So woulda, coulda, shoulda, but it's all good. There are lots of things in my life wouldn't have happened that I couldn't live without. So, it all happens for a reason, right?
Right, exactly.
But so then you got wiped out in 08 and 9. Yeah, welcome to the club. And then what happened?
Well, as I was talking with Matt, the loss of the money is one thing, but the loss of prestige, the loss of self-esteem, the loss of confidence, the loss of all of that was overwhelming. And it was a double whammy for me, because here I am in the counseling profession, and I'm supposed to be able to handle those things, and I wasn't. I couldn't handle it, and I became extraordinarily depressed. It took a long time to come out of that. It really took about 6 years to finally get back into the game. And
can I stop you for 1 second?
Sure.
Guys, this is why it is so important whenever you do anything, as a vehicle, when I call it a vehicle, be it real estate, be it buying a business, be whatever you decide to do, stock market, your vehicle, don't let it become your identity. And a lot, it's very easy to have it become your identity, because if it fails, you've failed. Where if it fails and it's not your identity, it's just your vehicle, then it's a failure, but you're not a failure. And so I just want to add that to that piece. Yeah. So it took you 6 years.
Yeah.
And then what?
6 years. And then by then the market was coming back. I didn't lose absolutely all of the properties. So values were starting to come back. And so then I took the equity from those properties and started investing in multifamily. And also during that 6 years, it was some really difficult years, because I didn't just lose my property at that point in time because of that, the economy and everything. I lost the job that meant so much to me, and that was really the
educational
my identity.
job.
Yes.
Oh wow. Okay.
And
I didn't know schools cut back then as well. I mean,
they did. Yeah.
No kidding.
Yeah,
wow.
Yeah. It was, and so getting all that back together, I finally did. I finally secured another teaching position, and the value started coming back, and so I started investing in multifamily. But it wasn't just that the value started coming back. I had also started networking, joining masterminds, and actually getting educated. Whereas before 2008, I was just kind of
flying solo,
flying by the seat of my pants, looking at appreciation and thinking, well, it's it's
going to happen forever. It's going to go on forever. Yeah, we all thought that. Yeah.
And
so you recognize the need for education.
Yes,
it's so funny that we have a parallel story there, because I bought thousands of houses without any education. And then finally, once I started getting into multifamily, I recognized, and even far along in the journey, I started educating. Well, I'm sorry, I interrupted. Please continue. But yeah, it shortens the learning curve when you pay for speed and prevents mistakes. And a lot of people that are in the single family and wholesaling in flipping in space, think they can go out and do these larger multifamilies on their own, not realizing, number one, that it's a team sport, but number two, that there's a lot more zeros. And that's why a coaching program or a group, a mastermind that you join, where you've got other people looking over your shoulder, looking at your deals, evaluating with you, telling you why not to do the deal, rather than just telling you to do the deal. You're nodding. You agree with all this. Yes, is super important. I don't know if you're aware. I've got a coaching program that called my Warriors, and I'm blessed to say I think we're over 250,000 units now under my tutelage, something I'm very proud of. And they're all done between warriors. They're all done together. And so that environment that you put yourself into, I'm sure, was a catalyst for that. Yes?
Well, absolutely.
Yeah.
And I thought, as I was going into multifamily, I thought, well, I'm going to do this myself. I mean, I had a realtor's license. I had closed all kinds of properties. I knew the trade. And I thought, well, it can't be any different. So I started out with the idea that I was going to put together my own company. And I started networking with realtors, started looking into, got really educated in underwriting and understanding that process, and started putting offers out there. And I put in this one offer on a property, and I went home and I hoped to God that they didn't accept that offer.
Really?
Yes.
You were terrified that they might actually accept it. I've been there. No, yeah. I've been there. And, when you've got a big equity raise that you're facing and things like that, sure.
And sure enough, they didn't accept it. And at that point in time, I realized there are experienced operators out there whose teams are already together. And it's ridiculous for me at my age, at my point in time in my life, to start my own company, join with those who already have it together. And so I thought, well, what can I do? And I go, well, I can raise capital. And so that's really what I have been working on since 2020. I started my podcast with the...
Oh, you have a podcast.
Yes,
what's it titled?
It's titled Streams to Impact.
Oh, I like the name. Yeah. Okay. I like the name.
And so, of course, streams of income, and wealth is an avenue to make positive impact.
Oh, I love that. So, I love what that says, to make the world a better place. I love that.
Exactly. And so that's what I've been working at since 2020.
And so you've aligned as a co-GP, I assume.
Yes,
with other operators, very common dynamic, they tell you about a deal, and do you get involved in the due diligence process, or do you? I'm assuming you underwrite it, but you actually show up at the property and look at it as well. Good, you need to. I'm sure you know that. You can't just raise money. You have to be actively involved. You can't be an equity raiser, but that's a fantastic way to get going. And a lot of people, that's how they get into this business. I've got scores of students that, literally involved now in thousands and thousands of units that way. So tell me where do you invest with more than one group or oh, you do. So you've got several operators that you like dealing with.
Yes.
And where are the assets that you've been involved in?
Here in the Southeast, primarily in our last quarter, we were involved in three different opportunities. One in Montgomery, Alabama, the other in
Deep South,
in Murfreesboro, Tennessee,
I like that town,
and Greensboro.
Oh,
North
that's a good town too.
Yeah.
And what are the typical asset size that you go after?
Over 100.
So talk about the process that you go through when you're evaluating not just an operator, an operator's team. You said we, by the way. Is it you with someone else, or is
it's me?
It's just you. Got it. Okay. So when you're raising money, well, let me back up. When you're evaluating a potential operator, talk about the things that you look for in that GP team. Let's start there.
Well, like I said, I started the podcast in 2020, which was the whole purpose of that was to come in contact with operators.
Good idea.
And so I have interviewed probably over 650 or so operators. So even though I don't sit down in face to face like you and I are doing, I'm sitting down face to face
on Zoom.
On a Zoom.
Yeah.
And so I'm. So that's my first introduction to these various different operators. And so I have a face-to-face conversation with them. And after that, then I'm doing background searches on them, which is easy enough to do these days. You can do that online. And then I want to know their track records.
Right.
And if they can't share their track record, then certainly I'm not interested in working with them. I like them to have taken at least 10 properties full cycle, and I want to see what their initial projections were as opposed to how they ended up once they've taken those full cycle.
Good questions.
Because I want to be fairly well reassured that they are underwriting conservatively. Every operator you ask out there, are you underwriting conservatively?
They all say yes.
Oh, absolutely, yes.
Right. I even said, I'll tell you a funny story, and I love him, even though most people don't. Grant Cardone, I saw one of his offering memorandums, and he says he's conservative as well, and he was projecting 10% rent increases for 5 years.
Yeah, like that's going to happen.
Yeah, exactly. But anyway.
Yeah. So I compare what they projected with what their outcomes were, and then I just want to get a sense and a feeling that they are honest and,
of course,
you
and trust your intuition with that, because you've probably got a very honed sense of intuition. Yes. Yeah. By the way, guys, I also have a resource for this. But what he just said is fantastic. I mean, you get someone that meets those criteria, you're well on the way. But I've got a book. It's in rodslinks.com. It's called Questions to Ask a General Partner in a Syndication Before You Invest as a Passive Investor. And, other questions could be things like, what's your plan for the asset? Are you going to refinance? Are you going to sell? What's the target market? Obviously, what sort of financing are you getting? You and I talked about that before we started recording. There's a lot of people in trouble, myself included, on a couple of deals with bridge debt. Who's going to manage the renovation? How's the accounting handled? When do KPs go out? There's just a bunch of questions in here that'll help you, in evaluating a general partner before you invest in a deal. So check that out. It's at rodslinks.com. Okay. Now when an operator brings you a deal, you do your own underwriting as well?
I do, but I'm not the best underwriter in the world. So I do partner with a fellow who
looks at it for you. Okay, well, thank you for that honesty. Yeah. Same here. Same here. I'm the mouthpiece. I've got a analytical person I can lock in a room and with a spreadsheet and throw raw meat in once in a while, and he's happy. So yes, that's who I use as well. You want to play to your strengths, right? And you're obviously a great communicator. You probably have to push yourself sometimes to do that communication, but when you do start a communication, it's a very connected communication. So you're playing to your strengths there for sure. Well, that's a great business model. And I will tell you guys, those of you listening, that if you've got any sort of a database of people. If you're in a group like medical professionals or IT professionals or educators, people that really aren't going to be exposed to the ability to invest passively in real estate unless they're educated in that process. You could, and even if you don't, you can absolutely build that list, through social media these days as well. Raising money is a fantastic way to get involved in this business. And I teach this in my boot camps as well, and how to raise the money and how to set all that up. But, it's a fantastic way to get started. And I will tell you, finding the deals isn't going to be the issue here in the near future. I looked at 2 deals in San Antonio last week that were being sold for the debt. And my SEC attorney called me this weekend and said he just got 4 new clients. They're all foreclosures in this business. And there's a meltdown happening right now in the multifamily space. So there's going to be incredible opportunity. And so finding the deals isn't going to be the issue. It's raising the money. That's a fantastic way to get into this business. Well, let's shift gears a little bit. Do you monitor macroeconomics at all?
Probably more than I should.
Okay. All right. Great. Well, then let's have some fun here. I'd love to get your opinion on Trump's use of tariffs as it relates to our economy. If you've got any thoughts on that, I'd love to hear what you think.
Well, I've heard a lot of pros and cons on that, and I'm not an economist, so
okay.
I'm kind of not forming any particular opinion. I'm hoping for the best.
Right.
But there are certainly those who I follow who say that he has a very definite game plan, even though he seems to be very erratic, that he actually does have a game plan.
Same.
And that this is going to be somewhat painful for a while, but in the long run, it is going to be good, and that it actually will bring manufacturing back to the United States. Which I think is what he is hoping for. And of course, the cons that say that, no, that's not going to happen. He's going to destroy the economy. There's no way that manufacturing is coming back to the United States. And so where I'm someplace in there, there's got to be a middle ground. And I'm not sure exactly where that middle ground is going to come down.
I tell you, I'm very, very pro what he's doing right now. Just, I feel, from what I'm hearing, we've been screwed by a lot of these countries for years, and they have their own huge tariffs, Canada being one of them, on lumber and things like that. And, people are concerned about the impact on consumer pricing, but, and certainly it's creating some global trade tensions, and retaliatory measures and things of that nature. But, he's a extraordinary businessman, and he knows how to exert leverage. And he's already gotten concessions from both Canada and Mexico regarding the fentanyl issue. And they're each putting 10,000 soldiers at each border, and I don't know if it's window dressing or if it's reality, but I personally know someone whose son died from fentanyl. And it's creating economic uncertainty, but we already have economic uncertainty. Our national debt is insane right now. I had an economist sitting where you're sitting right now, and he said something. He said that in the last 4 years, the Biden administration, 80% of the currency in circulation was created. Like up to 2020, only 20% of the currency was in play. And now we've created another 80%. And we wonder why there's inflation. And so, we are headed for a major reset if things like, the DOGE initiatives and minimizing government spending weren't in place. I think we would be headed for what could be a real reckoning in this country. I don't know if you agree, but I feel that way. So I think, him exerting some financial pressure on these countries that he feels have been taking advantage of us, I think could be a real positive step. I hope so. Let's hope so, right?
We will see. But before we leave tariffs, now there are commentators who say that his ultimate plan is actually to utilize tariffs to do away with income tax.
Mm-hmm.
And that he is also leading us back to the gold standard.
Wow.
I don't know if these things are true or not.
Wouldn't that be
that's
something?
What
wow.
some of the commentators are saying.
Wow.
So.
Yeah, there was some talk about them opening up Fort Knox to see if the gold's actually there. I have some gold, thank goodness. It's in a vault downtown, and it's gone up fairly well. It's been a nice play for me. Yeah. But yeah, well, along those same lines, as I brought up Doge, we've seen Tesla stock get hammered. We've seen Tesla auto dealerships get attacked and Tesla cars get firebombed, and Bondi treating it as domestic terrorism, and she's going to make some examples of some people that really screwed up here. What are your thoughts on the Tesla stock decline?
I don't, I just don't follow stocks.
Okay, fair enough. Fair enough.
So, I mean, it's a mystery to me why stocks go up and go down, and it generally has to do with rumor and innuendo. It seems to me like, and so.
Yeah, I have to agree with you. I have to agree with you. I think that he's upsetting a lot of people, and a lot of people are losing their jobs, so there's a lot of anger and angst around that. Obviously, I mean that's a given. But when you hear about some of these things they're discovering, it's kind of astounding what some of the money was going for. Even if only 10% of it's true, it's staggeringly disappointing. Mm-hmm. I'm a big Elon Musk proponent. I think he's a brilliant man. Whose heart is in the right place. And so I hate to see this stuff happening, but I think it's all very positive. I'll be candid. I was very worried for this country for a long time, based on some of the economists that I've had sitting in that chair telling me what the fact that our interest on our debt is more than our military spending, and not too far off from what we collect a year in income tax. I mean, and so at some point, it's common fiscal understanding that we're headed for a train wreck if something doesn't change. I don't know if you agree or disagree.
Well, I mean, my understanding is that we've offshored essentially the debt payment, and that is through the dollar as the world currency, and that's who's actually paying the debt. It's not us, but it's everyone else in the world. So, there's great concern about that because BRICS is a reality. I mean, a lot of people I talk to, and they go, "What's BRICS?" They don't even know
really
it's happening, and some who know it's happening are going, "Oh, it's never going to go anywhere," and I'm going, "It's here,
right?
It's happening. It isn't a fantasy. It's happening. What it's going to do to the dollar." That remains to be seen.
It could be very bad.
It could be.
It could be very bad. You see these things where they're talking about backing it with metal and or commodities even, and and a lot of countries have jumped on that bandwagon that I think would love to exert some control and power over the United States at some point. It was that was another very sobering piece.
I mean, the BRICS nations combined have a larger GDP than the G7 do at this point in time.
No kidding.
No kidding.
Wow, I did not know that.
Yes.
So, I mean, I know what are some of the largest players? China, of course, Saudi Arabia joined in there?
Saudi Arabia, Russia. Nigeria just lately, which is the largest African economy.
Wow.
Brazil. India, Brazil are emerging economies.
Yeah.
And
they're huge.
Yes, they are. Yeah. And I think there's 13 or 14 at this point in time, but I don't remember which ones there are.
Those are all the biggest ones. Those are all the biggest ones.
Indonesia, and there's a lot of emerging economies.
And you know, if I mean, I know I've heard both sides as well, but it's very concerning. So what's next for you? Are you rubbing your hands together gleefully, hoping you find some deals, or well, you're not actually the one finding the deals, but hoping your partners find some exponential opportunities?
Well, I actually really got serious about raising capital really just this past summer.
Oh,
and
wow.
So that's when I really opened up what I call our Streams to Impact Prosperity Program, which is a program that it's a boutique opportunity, and we are really focused upon professionals and entrepreneurs who are purposeful and passionate about the work that they do in their calling. And they have probably been listening to financial advisors in terms of what they want to do with their capital. And so they are almost 100% invested in the stock market.
Mm-hmm.
And so I established our business in last summer, about June of last summer, to provide opportunities that are outside
Passive investing opportunities.
Passive investing opportunities in alternative assets,
Like
multifamily, including apartments, mobile home parks. But we also are looking at opportunities outside of that, ATM machines and
interesting.
And car wash opportunities. And also just recently, we've opened up some conversations with some individuals that actually are purchasing businesses from essentially individuals who are retiring. So they're high value businesses.
Love that.
And the returns that they are projecting are just phenomenal. But I have a lot of work to do on that before.
That's a big one. That's something I'm very interested in as well. I mean, there's a silver tsunami happening right now.
Exactly.
A lot of businesses are owned by these baby boomers that are retiring.
Yeah.
There's an incredible opportunity there.
Yeah.
I'm also very interested in that. Would love to continue communicating with you about that. I'm very interested, and I always said that if there were two of me, one would be buying businesses for sure. Now, of course, someone's got to run those businesses. Now, what a lot of people will do is they'll keep the CEO involved for a period of time, you know, and have a payout over that period of time, which helps in a transitionary period. But one other thing I'm very interested in is senior housing. Mm-hmm. I mean, there's not nearly enough beds for our seniors, and it's something I was interested in. And I'm actually getting into it. I'm going to be raising money for senior deals here literally in the next few weeks. There's some phenomenal opportunities because a lot of these facilities, incredible opportunity there as well.
Yeah, a real shortage there. So,
for sure. And you know, I have an affinity for the seniors just like I do for children. And, you know, I was going to do it, 20 years ago. I got my assisted living administrator's license here in Florida, and I was very serious about it. And then, you know, I shifted gears into multifamily. But so let me ask you this. You know, I get a lot of listeners that know they want to, you know, do something in this business. You know, they have a W-2 job. They see the success that people have had, but out of fear or limiting beliefs or whatever, they don't take action. Could you speak to those people?
Well, absolutely, and I mean, I come from that background, and I mean, the reason that they're really my avatar is because you know, I love what I do in higher education, and I don't have any desire to not be there, and yet there's opportunities for building wealth. You know, I mean, for instance. The professionals who are passionate about the work of their calling have spent years educating themselves without any money coming in. It's, at a minimum of 5, and, physicians in their specialties have taken 10 years before really anything comes back.
Right.
So they're late starting in terms of building their wealth, even though they may have good incomes. They're behind the 8 ball from the get-go. And if you chart this out, plumbers who go out of high school go into their professions immediately. They're way ahead of physicians, which people don't realize.
That's kind of interesting. Yeah, that you think about it that way.
But they spend a lot of time in that. They're passionate about that. That's where they want to make an impact and a difference in the world. So looking at alternative investments looks very strange to them, because all they've ever heard is put your money in your 401ks, your IRAs, and then your financial advisor will take care of all of that.
Oh yeah, and your financial advisor very often is tied to a particular group of stocks and or opportunities and they're very often a salesperson.
Absolutely.
But my question was more geared for people that would rather do it actively.
Okay.
Could you speak to those people as well? What would you suggest they do if they're stuck and they know they need to make a move?
And they need
maybe they don't have a lot of liquidity to invest. Maybe they're not a doctor or IT professional that has a few $100,000. Maybe they've got 100,000 or 50,000. They really want to do this actively, but they're, for whatever reason, they haven't taken action. Could you speak to that group?
I wouldn't listen to all the hype about single family.
Right.
I would go directly into multifamily.
Yeah.
And if you've got $50,000 to $100,000 and you really want to be in the active side of it, find an experienced team to partner with.
Yeah.
Don't do it alone.
No, that's great advice. And which is why, again, my Warriors are so successful, because there's dozens and dozens of teams in there. And that's really, you're not going to do these deals by yourself, guys. So regardless if you join our Warrior program, but get into groups, go to meetups, go to local meetups, meet people that are doing this to identify and find a team that you can add value to. And adding that value might be finding deals. It might be underwriting those deals if you're analytical. It definitely could be raising money. And maybe it's even, if you've got construction experience or project management experience, you can be involved in the asset management. But that's what I wanted. I wanted them to hear it from you instead of from me. Are you involved in the asset management at all, or pretty much just the front end stuff?
Just the front end stuff.
Okay. So you don't participate in the asset management calls on an ongoing basis, or?
No, I don't.
Fair enough.
I mean, I've done all that. I was a property manager as well as a realtor. So I have managed properties and I have done all of that. And like you said, find the team that you want, and there's all kinds of different things you can do. Honor who you are as a person. Yeah.
I'm so glad you said that. Play to your strengths.
Yes, exactly.
Play to your strengths. I'm so glad you said that. A lot of people feel like they need to build all their weaknesses to know the whole business. You don't. When you play to your strengths, first of all, you're loving what you're doing because you're strong at it. And when you love what you do, you never work another day in your life. So that's number one. Number two is you're going to be passionate about it, and passion's required to influence people, and you're going to need to influence people. Absolutely. So play to your strengths and hire a line or partner for your weaknesses. Would you agree with that?
Oh, absolutely.
Yeah.
Absolutely.
Yeah.
And if you're in your W-2 job and you just can't stand it and you want out of it, and a lot of people come into this business because they're in that situation.
Right, a rat race, it's called.
Yeah. And then you probably do want to go into the active side of it. Yeah. But if you want to stay in your profession, you probably don't want the active side.
Right.
But if you're going into the active side, take an inventory of who you are as a person. What are your strengths? What are your passions?
Yeah.
And because there are so many jobs associated with putting together a multifamily deal.
Yeah.
And there's something in there that's going to appeal to you as a person.
Exactly. I tell people at my boot camps, find what's your superpower, and I have them get in groups. For the introverts, I make them get up and meet people. That some of them, I mean, they choke when that happens, but then afterwards they tell me they really appreciate that I push them, and I tell them, introduce yourself, tell them who you are, where you're from, and what's your superpower. What can you add to a group, and that's how I combine these people. But in your journey here, did you lean on mentors as part of this process?
Well, absolutely. I mean, definitely the first steps I took were with the mastermind group of people, and that introduced me to other people on a one-on-one basis,
other operators.
Yeah, but in my podcast, I mean, it's been so educational for me. It's not only networking, but it is extraordinarily educational. On every episode I do, I'm learning something.
Same here. Same here. I've learned things today with you. Yeah. No, same here. It's such an incredible vehicle, isn't it?
Yeah, absolutely.
I mean, yeah. But, one last question, because you've dealt with a lot of mindset related challenges and pushed through in spite of them. How did you push through in spite of them? What was the driver? What was the why that caused you to say, okay, I'm going to get past this no matter what?
I didn't want to end my life as a failure.
Yeah. Yeah. We fear failure. Yeah. I'll tell you. I also feel like we don't want to live our life with regret either.
Yeah, exactly.
We don't, I don't know if you heard the story about that hospice nurse in Australia that asked patients if they had any regrets, and Bronnie Ware is her name, and she wrote a book about it. It's a bestseller, something like The 5 Regrets of Dying. And the number one regret was not living my life, living someone else's life, not doing what I know I'm capable of. And I can't think of anything worse than that. And you've pushed through some pretty amazing obstacles. So, that's awesome.
Well, during that 2008 time, from 2008 to 2016, I did go back into counseling, and I talked with the therapist about wealth building, and he goes, well, you don't have to have wealth to be happy. And I'm going, I know that. It isn't about happiness. It's not about fulfillment. It's not about my well-being. It's that I just don't want to end my life on a Social Security check. Yeah. And I just wanted more. Yeah. And I still do.
I mean, you can't live on Social Security. Good Lord. Yeah. I see these checkers and people picking up carts at Publix that are in their 70s and 80s, and it's like, oh my God. And it's going to get worse because there's a whole bunch of them coming. Well, listen, I really appreciate you coming down and coming on the show. It's been a real treat to meet you and talk to you and hear your story, and you've added some tremendous value, and I appreciate you coming down here.